Banking with Life highlights.
You know, math is math. Like, if I seen a policy illustration, I don't ask for them. The guy paid 97% to the PUA. So this idea that you can only do 90-10 is a lie, okay? You're going up to the limit on those particular companies that they promote. You know, I was told this week, and I don't know that it's true, I don't know I have a chance to share it with you, that one of those companies, as the fourth quarter of last year, policies issued from that point forward can't have a first-year loan.
Really?
Well, now that's unverified, so I probably shouldn't say it. I should get it verified.
So you can build all that cash value, you can't borrow against it though?
For the first year. But I'm just saying that 90-10 might be
Which
a
is
limit.
that's the natural extension of that, right? It's like if a company's going to let you do all that, you know, they can let you do it as long as you can't get to the money.
Right. And then as long as you have to qualify in year 2 or 3 to continue that god-awful ratio, right? So there's no question that the math is math. 90 is bigger than 60, you know, a 60-40 split. And whoever said that was right, just because Nelson did it, does that mean that's the only way to do it? He only illustrated 4 years of premium payments and equipment financing, number one. And the people that say, oh, that's how you do it, either they don't have any clients or don't have any, their marketing's not working out for them. So they have to sell their client a new policy every 4 years, right? Because somebody's got to get paid, right? Or they don't know what's going on in that illustration, or probably cumulative, and they don't know what's going on today in life insurance. But so my point is this: that is 90 bigger than 60? I mean, come on, yes. And so why do you want to compare, 90 10 to 60 40? Like that's the only comparison. Right. And it applies to everybody. If you're 20, 25, 30, 50, or 60. Anywho.
I go through this with people. The trade-off is for a given total annual premium number, right? So we have a certain amount of premium being paid to all the components, base, term, PUA in a given year, certain number. The more of that number that goes to base, the higher the long-term cash values, death benefits, and dividends will be.
What? Wait a minute. So if that's true, and it is, you mean, so people that are buying into this fallacious, erroneous idea that 90-10, or as I experienced earlier, and this wasn't the only time I've seen this, I've said it many times, you can go to 99-1, 99 to the PUA and 1% to the base with legitimate life insurance companies. Okay, so if you can do that, and I'm squeezing down the most powerful component of a life insurance policy in the latter years, the further out you go, the more powerful that base premium is. So I want to squeeze that down to the bare minimum. That doesn't even make sense. You go to restaurants today and they're understaffed. Everywhere you go today is understaffed. Why? I don't know. We all hear the narrative, well, unemployment is, way too high. And then all the governmental programs that they're coming out with where somebody can stay at home and make, the equivalent of $15 an hour plus get 2 years of free healthcare. What's the incentive, right? Well, if you don't understand what the incentive of applied knowledge and work and effort and the reward that brings, well, that may be appealing. Let me stay at home and I can earn $15,000 or $20,000, $25,000 a year. Well, you will never experience the rewards of being productive and participating in capitalism. And how can you? The future's unknown until you do it and experience it. So I'm just saying that we have forgotten how to be free, and we have if we forget how to be free, then how can we perceive or project the possibility or the results of being free and applied? Is very difficult, is what I'm saying. Where if we go through this hardship, whatever it is, we all have hardships, in learning and education or application of a trade or whatever it may be. But why do you go through all that? Why do you go without? Why do you, endure these hard times? It's because of what we become, right? It's because of what we become going through that journey and the freedom and all of the fruits of freedom.
Exactly.
And I think the infinite banking concept is actually and literally Austrian economics at the you and me level, right? I don't have to be dependent upon a market, any market, which I cannot control, whether it's a real estate market, interest rate market, Bitcoin, digital.
And it's, and it's one of those things, like, again, it's a foundational component. I still have all the other stuff. I still have the 401k. I still have, the Roth account. I still invest in the stock market. I still invest in the real estate, but those aren't my foundations. My foundations is this concept and being able to leverage this. And I think that's one of those things, like, I have friends that are really worried about different things because they aren't set up the same way.
They have an opportunity.
They do.
Capital attracts opportunity. All of the schools of thought, the monetary schools of thought, Washington, especially Wall Street, say and act like, oh wait, we're going to create this opportunity, i.e. this god-awful financial product that we created and juiced it up, makes it look really good and very sellable, and we got all the illustrations and examples of how great this opportunity is, and then we'll put it out to the market and it will attract capital.
Yeah.
It's bass-ackwards.
Yes.
Right? And I'm just telling you, I learned it from Nelson. I heard it, didn't see it. But the more capital you have, the more opportunities show up. And I'm telling you, it will improve your ability to recognize an opportunity, which then makes it very easy to spot the noise and to walk away from the noise, this FOMO, fear of missing out. You're not going to miss out anything if you properly structure a policy. And then, James, in some of these comments, you hear, what is properly structured? It is not a 90-10 policy. It is not an 85-15 policy. It is not starting from a percentage to the base and to the PUA. That is not a proper structure. Once you have a proper structure based on your abilities, your experience, where you're at, where you want to go, then you can determine what the ratios are. No kidding. We're still not getting above third grade math to figure out a ratio. That is not where you start. I'm just saying.
I've seen some of your older presentations and things where, you talk about the lies of the 401k. And I think, I did wake up to that lie many years ago after contributing to one for a long time and still have some money in it. I did take advantage of the opportunity to take a lot out last year. I took out every dollar I could, under the CARES Act because I wanted to. And I was like, I need to get this out from under the, hold of the government. And, I still have money in there. But, when you're 20, 59 and a half seems a long way away. When you're 50, 59 doesn't seem so bad anymore. So it'll be here before I know it. And, it's one of those things that, fine. I don't need that money. It's hidden. I guess I can consider it, backup money if it's there. And if I really, really need it, I can get at it. But not without penalty and not without penalty for the last many years. And there's, again, only that short window where you can take it out. And then I know my dad even told me, when he turned 71, he was like, I don't want that money out. And he had to take it. And I think that part of just how much control you give away of your money and I think, but if you don't know where else to put it, like it's better than putting it nowhere. It's right. It's better to have saved it in a bad place than to have never saved it. And, for many years I didn't save there and I didn't have a life insurance policy that I was funding. So, for those years in between when I didn't know better or didn't know that this existed, I probably wasn't the best steward of my money in those times, but I just didn't know. I knew where I didn't want to put it. So I invested in my businesses. I invested in myself, but I wasn't using every tool that was out there. And so I think that's why whole life and understanding just the short-term benefits of it, the long-term benefits of it. And, it does take time, like you say, it takes time to build these policies to a place where it will provide the things that will provide, but that time is going to go by anyways. I'll be, every year passes and you get closer and closer to the, the performance that you see on the illustrations. And like you say, it will probably even potentially outperform that. But if nothing else, there's at least the guarantees of what is there and what I've contributed in the tool, how I can use it.
Mm-hmm. And then, what can you do? What can any of us do? What can each of us do in a 10-year time period with the capital that you do have access to? Oh my gosh, the only limit is between your ears. That's it. So, and I agree that this is a habit that we should all have, is saving money somewhere, understanding the difference between saving and investing.
Yes,
and then,
that's true too.
Yep. And then recognizing that the best investment is you. The best investment is you, your health, your intelligence, your knowledge, you, right? Yeah. You talk to a client, it's like, James, often there's skepticism up front. I get that. You should be skeptical. No problem with that. I had a great conversation with a client. We're like, coming up on his second year premium. His second year premium. He had already had a policy. I'm like, you need to keep that. Are you sure? Yes. And he, since in his first year is not even up. Okay. He's taken over 2 mortgages, and he's fixing to take over a 3rd mortgage on an apartment complex. And he's like, oh my gosh, his words, I don't see how these people get hung up on these trivial points that they try to make. Mm-hmm. The illustration, dividend this, dividend that, guaranteed interest rate, whatever. I mean, how powerful is that? Oh, but wait. Before you take over that 2nd mortgage or the 3rd mortgage on an apartment complex, James, should I expand my system? I think I should. What do you think? No question. Mm-hmm. You shouldn't. Here's how. Mm-hmm. You should do it. I mean, you could take over the mortgage. You could pay off debt anytime. I mean, if you have the means, right?
Yeah.
Okay. You only have an annual basis to pay a premium. So earlier, prioritizing cash flows. Premium first. Premium. Outranks loan repayments. All right. And I'm not saying, PUA premium or premium. Mm-hmm. Every check you write to the life insurance company is either a premium or a loan repayment. Premium has priority over loan repayments. That's general. Mm-hmm. But now if you don't have any discipline and you let that loan grow uncontrolled, then you're not being an honest banker.
I'm driving on a major street. I'm heading west, and there's without knowing the city dynamics very well for the listeners, but I know tenths of a mile because I drive these streets all the time. I'm about 8/10 of a mile from when I cross a railroad track to the next major intersection. And right as I'm crossing the railroad ties or the railroad tracks, I call my life insurance company because I'm getting ready to come here. I'm helping my mom manage a home renovation to our childhood home so we can sell it. And I had already written a check, and it was already in snail mail to the contractor for $10,500. So I called my insurance company. I think it was option 2 or 3. I get usually one of 3 people because I wear them out too when I make PUA payments. Like, I wear them out. You know, I sold a bicycle that I bought for $800 3 years ago because of importing and import prices and such. I sold it for almost $1,200. So I made, $400 there extra. So what did I do? I took that cash. I immediately go to the credit union, and then I immediately make a phone call to the life insurance company. It's like, get it in there and get it working. I don't want this money just sitting idle. So I called the insurance company. I think his name's Kevin. Kevin answers, and I was like, Kevin, I need a policy loan. Do all the verification stuff of who I am. Here's your max loan amount. How much would you like? I need $10,500. Okay. Would you like that ACH to the same bank account where your premium comes from? Yes, sir. And end of phone call, and haven't even reached that next intersection, that next major intersection. So that took about 2.5 minutes. No, what are you using it for? Our calendar's kind of booked. The loan officer doesn't have any time for you until next Thursday. And then, to go through their underwriting. So one, my money, my control, my bank, and speed. And it was done in 2.5 to 3 minutes, and the transaction was in process, and that was it. So when you're talking about stress relief, or fill in the blank with whatever, that's control. That is control.
It is. Had a guy contact us last year. Excuse me. He's like, James, my grandfather retired as the #1 New York life agent in history. He retired.
The individual who called you was himself older.
Yes, he was in his 70s.
Grandfather. So this is a.
And the guy sent me the letters that I'm referencing right now.
I know, yeah, you show me.
1927, he's got a letter from the president of New York Life because the agent's retiring and he's moving from New York or wherever he was on the East Coast to the West Coast, California. And the president of New York Life addresses the president at the time of Bank of America by name. One president of a life insurance company to the president of another bank. And the origins of Bank of America are really noble origins if you go back. All right. Okay. And the letter says, give this man, he's the greatest ever New York life. He's got blah, 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 blah. Been in business with other. Give this man a $1 million line of credit on his word if he so desires. 1927. Okay. Now the individual that calls me his grandson is like, wow, this infinite banking thing is really good. And I'm in a mentoring group with about 12 other really sharp individuals that do all kinds of real estate investments and all of these other things. And we like to vet things with each other, to keep ourselves honest and keep ourselves from making terrible decisions, which I agree with, a mastermind and mentoring group. And so, I explain what he could do, what could be done, and he explains to me what he wants to do, and so we create a solution, right? And then right before implementation, he sends me an email, and he compares, and this guy's doing real estate, going through the tax code, where currently, if the proposed tax changes in real estate take effect, he's going to lose his Yahoo substantially. And I'm not saying it will or it won't, happen. He sends me a comparison of gold in 1927.
I remember this.
And the comparison of gold, what gold has done from 1927 to 2020. And he tries to compare that with life insurance at his age of 70 based on 2020 and projecting them out and saying that like this is an equal comparison. And then, of course, he questions my integrity, which set me off, right? Because, he and his siblings and his parents squandered the grandfather's wealth, squandered it. And now your group of 12 can't help you, right? To the extent in which you need help.
It would be another group of 12.
So I'm just saying, that's a warning. Don't wait to make good financial decisions, right? Don't rely on pseudo experts, right? God gave you the ability to read and write and think, right? I mean, reasoning is what separates the creatures from man.
Yeah.
And so my encouragement is to be an example.
Mr. Neathery, I don't even think I ever owned a briefcase. But I had an idea for the banking concept. I took off to Office Depot and bought me a brand new silver briefcase. And you didn't cheap either. And I have some valuable stuff in there.
What you got in there?
Oh, I have the whole contract in there for one thing. I have that last car purchase contract in there. I have my codes and IDs in there for pulling up my account. I have different definitions of words that I hit people with. Usually if I write it up, I don't need it anyway, because just like the saying one time you say success is a progressive realization of a worthy idea. And I have a lot of sayings in there, like people say, I've been running all day and I've been doing all day and I'm working late in the office and working late in the office. But my question is doing what? Because I think if you really, really know what you're doing, it doesn't break a lot of sweat. I tell people all the time, everybody's born with a mind, everybody's born with a brain, but nobody's born with a mind. It had to be developed. And what our mind is being financially developed in is a worthy idea of success and a progressive realization.
I love that. Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.